Just
All
say
right, countdown. Good morning. This is Joe Scorese at Smart Real Estate Podcast with my co-host Yardell Perkins with Perkatech. Got basically the guru of social media behind the drape here for us, keeping Smart Real Estate Podcast live on Liptify, Google Play, iTunes, Facebook Live, and LinkedIn. And we're also on YouTube. So these are all going to YouTube once we get these cut and produced. I want to thank him for putting everything together and keeping things moving forward. I am with First Trust Bank. I'm a senior loan officer, mortgage lending specialist, and I interview and network with real estate professionals in putting together your power team. And the guys I have on this morning, we were supposed to be doing an event, so I figured we'll just do it to Zoom today for some of the people that are watching. We have Eric Mauz and Nick DiFederico with MB Capital Solutions. Thanks for coming on the Smart Real Estate Podcast, guys.
Thanks for having us, Joe.
Can you give me a little background on each other? Who wants to start first? Age before beauty or beauty before age? Who would like to give a little background and introduction on yourselves?
Age before beauty.
Age before beauty. I'm up. So like Joe said, I'm Eric Mauz, owner of MB Capital, also funding strategist on the team. I have a background in the engineering world, went to Drexel University right in Philadelphia, did project engineering work for about 10 years. And along the way, I've been invested in real estate since college. So for about the last 18 plus years, I've been out there doing some fix and flips, have a portfolio of rental properties, a couple wholesales in there. And over the past 12 years, have really started to educate and coach and guide small business owners and real estate investors on how to position their financial life and their credit world so that they don't miss out on opportunities. And that's what MB is all about, is really helping the small business owner to obtain access to unsecured capital. So I'm excited to be able to share what's going on in the state of the unsecured world right now. And looking forward to, just providing you some good information today.
Nick, a little introduction of yourself.
Yeah, I'm Nick DiFederico. I'm lead funding strategist at MB Capital Solutions. I actually started with MB Capital as a client 10 years ago when I was a small business owner. Eric was able to put in place capital for me. Over the course of time, I ended up getting into real estate investing. I was in the jewelry business for a long period of time, and I kind of saw the writing on the wall there. So I came back to Eric, because as I was investing in real estate, I had a mortgage background for, a good 8 years. And we partnered up, and the rest has kind of been, the history from there. So, we spend our day helping real estate investors all across the country get access to capital so they don't miss out on opportunities and can go out there and create wealth for themselves in real estate.
Great. So, guys, tell me about the state of the lines of credit right now, considering COVID-19 and everybody pretty much sequestered to home and working from home. What is the state of going on right now with you guys and inbound traffic?
Yeah, we're still seeing a ton of traffic in terms of client calls. For what we do on the unsecured side, things are still moving. Lenders are still lending, other than a little bit of a small inconvenience with some branches being closed, and maybe, closing on a line of credit being pushed back. But the lenders are still lending. They're still accepting applications. Things are still getting processed. Things are still getting moving. So we're definitely still seeing opportunity there to be able to build up and acquire capital. It's a fluid situation, right? Like, nobody knows where anything's going here moving forward. So, we're telling clients now's the time to be proactive, start to build up capital while stuff is still flowing, so that, when the dust settles here and, whatever the new normal becomes, there's going to be a ton of opportunity in the market. So the faster you can start to assemble, capital to be able to pull the trigger on deals once we're allowed to come back out of our homes, people who are positioned well are going to be able to kind of make it out here.
Eric?
Yeah, I was going to say I like to say it's a little bit of chaos on our end because, with all the lending changes on the hard money side and on the secured and collateralized side of funding and lending, we have a lot of our existing referral partners reaching out to see how we can help their clients get more access, more liquidity. and then a host of new brokers and hard money lenders who are looking to start to build a relationship with us, knowing that we're still out there helping our clients get $50, $100, $150,000 to be able to use for, that the excess capital or the excess cash that they need to put into a deal. So it's interesting because even though some lenders are a little bit slower on their underwriting for the unsecured products, there are other lenders that are lending at the same speed that they were, a month ago. So we are, every day we're helping just educate real estate investors and helping them get some access.
Well, it's interesting you're bringing that up because, obviously I have my contacts in the hard money lending world, and I came from that world 20 years ago. And what I am seeing now is that where you guys are going to become more important than ever is that the loan to cost on either the purchase or the rehab that hard money funds has come down, where they maybe were giving 90% loan to cost on purchase and 90% loan to cost on rehab. They've cut back to 85%, 80% on both sides. So they want more money into the deal, both on purchase and now rehab, where a lot of these lenders were given 100% rehab. Yeah. Now they want you to bring some of that money to the table up front in the deal to make sure that they're covered on draw schedules with all these delays and licensing and permitting processes. So what happens is now your lines of credit become even more important to draw from because they need more money into the deal up front to start. More deals are blowing up right now because suddenly the hard money lenders overnight say, listen, I can't take 10% loan to cost down. I need 20% into the deal on the purchase side. Where do you get that money?
Yeah. They're also, just so you know, they're also starting to need reserves, like 3 to 6 months of reserves sitting in an account for the monthly interest only payments back to them. So I had a client middle of a deal had $30,000 that he thought he was getting on his next draw. And because of the new requirement from the capital lender on the back end, they can only give him $9,000. So $21,000 had to stay in that draw account for reserves, so that
he showed his own
payments.
Even if he showed his own.
If he showed his own, different story. But he doesn't. This particular client doesn't have it.
See, a lot of these lenders weren't looking at. See, to me, I'm a Fannie Mae lender or Freddie Mac lender, so I want to see 3 to 6 months reserves on any loan, right, up and above what you're putting into the deal. And these hard money lenders were not taking these into consideration. I'm going to tell you that there's a lot of people that are stretched out a little too much, and it's going to be very interesting how the hard money lenders treat them and bring them back in or bring the deals back. And you're going to see more inventory unfinished on the market in the next 6 months than ever before.
Yeah, exactly. And that's sort of the chaos that we're seeing on our end is it's clients that, hey, listen, I was about to close on a hard money deal where I only need a 10% down payment plus closing costs. Now they need 25% plus 3 months seasoning and 6 months reserves. And they're like, where am I getting that money?
It's going to be only for the seasoned investor. I mean, it's going to eliminate, the people that are taking these Drink the Juice Club classes, and spending a lot of money on learning how to do it for $15,000, $20,000, $30,000, $40,000. They're out.
They're out. Yeah,
they're out.
They don't have the liquidity. They don't have the credit. I'm even seeing hard money lenders tighten up credit requirements.
FHA just announced we're going to a 640 credit score.
Yeah.
Yeah, I heard 680 with some of them.
Well, so on the FHA government side, I think 640 eliminates a lot of the on the borderline people. I think conventional programs, you're going to see 680 requirements, especially with the 3% down product, home ready, or the 5% down product with lender paid MI rolled into the rate. You'll see some changes there over the next couple months because they are not going to walk into a 2008. Okay, right. Their banks are prepared more than ever before. So what changes are you seeing in the unsecured lending market?
So we're definitely seeing a tightening up a little bit in terms of requirements. Where we were for a long period of time, we were getting a lot of just streamlined lines of credit where decent personal credit, 2 years of business, and, we were able to get somewhere between 25 to 100 grand on a line of credit. Some lenders are still offering that. Some lenders have already started the process to tighten up, needing a year of tax returns, 2 years of tax returns, seeing, stricter credit scores. So it is a fluid situation. So, we're trying to be as honest with clients as possible, but, now while they can is the best time to start to build up capital. But yeah, we're starting to see more requirements from lenders. Lenders are starting to get a little bit more picky. Looking at tax returns a little bit more, asking for them. Before, when it was just, hey, if you got good credit and a business that's a year to 2 years old, we're going to give you money. Now it's starting to tighten up a little bit. So we do a lot of the traditional lines of credit. Where we're seeing the biggest pop for investors is when we're doing business credit card model, though. Luckily, business credit cards are still flowing. We're still getting approvals. And then for us, what MB Capital does on the back end is, educate and teach, clients how to actually use a credit card, liquidate it into cash, have it in their bank account, hold it for seasoning, use it for down payment money, use it for rehab costs, how to get creative with it. So, for us, we're always finding ways to be a little bit more strategic for our clients, so that they don't miss out on opportunities. But, a lot of the lenders are definitely starting to get a little bit more strict, and you're already starting to see a little bit of a tightening of guidelines. Good thing is, though, that lenders are still lending. We're still closing. Applications are still getting processed. So there's not a hold on what we do, like we've seen with like the long-term rental loans, where a lot of lenders are just freezing all operations.
Yep.
Who we're working with, money's still flowing. So knock on wood, at the moment, things are still rolling pretty good.
Yeah, I think a lot of banks are, they're still out there accepting applications. What I'm starting to see with some of the larger traditional type lines of credit is the underwriting is just a little bit longer. So they're not only diving into more information like Nick was saying, but I have a feeling that because of the lack of resources in banks right now, because they're getting a lot of calls for the forbearance that each bank or is offering in terms of delaying a mortgage payment or delaying a payment on an auto loan, a line of credit. I do think that that's affecting the underwriter's abilities to work a little bit quicker. And I also think that banks are they're moving a little bit slower just because of how fluid this situation is and how it's changing day to day. So but like Nick said, those 0% business credit cards have been the same as they were 2, 3, 4 weeks ago. So we're still continuing to help clients there pretty relatively quickly. So it's like we said earlier, we're definitely busy, and we got a lot of experienced investors who may not have needed us a year ago or even a month ago are now really reaching out and putting more opportunity money in place, more access, because they see the opportunities that are going to come out of this.
Staying liquid is going to be very important, and have your line set up. What should investors do to prepare themselves? What do you think, Eric? We'll start with you, and then we'll go back.
I mean, first thing is, if you have lines of credit in place already, I'm recommending to all my clients, all my contacts, to start to tap into the lines, start to turn them into cash. Let's say you have a $50,000 line. It may not be smart to try and pull all 50 out right now. The banks may flag that potentially, but if you could access 20 or 25,000 of that line and just deposit it in your bank account, I think that's a big plus here. And more specifically, you may not want to do that on personal credit lines, because that'll have a negative impact on your FICO score. So you want to be careful and make sure you're accessing the right type of capital right now in the unsecured world, because the last thing you want to do is tap into, let's say you have 50,000 of personal credit cards, you tap into 50,000 or 45,000 of it, and you're using 90 to 100% of it. Your score, which could be at a 750 right now, could easily drop into the low to mid 600s. And with that, that's a red flag for your banks when they're doing their periodic reviews, which they do behind the scenes without you knowing. Every 6 to 12 months, they're looking at your, they're looking at your credit. So you want to be careful not to abuse that personal credit right now. You start to abuse that, you're a red flag. They could potentially start to, either lower your limits or cut the lines if they feel that you're a high risk for them at that point.
Nick?
Yeah, I mean, that's all good points. What I also tell investors, and what I've been telling them, we've been getting inundated with calls and just guys working on deals. I've been telling them to start to look at their exit strategies on deals, start to rerun numbers, holds that, may be harder for them to be able to get into a long-term rental loan. They need to start looking at it as a flip. I had a lot of clients where, the exit strategy was to get into an asset-based, long-term rental loan, and those are pretty much on hold, where, the loan was just based off of the debt service of the property and not so much on the financials of the individual. So some of those, easier to get, low credit score, debt service, long-term 30-year fixed rate rental loans are hard to get right this moment. So, start looking at some of the deals that you're doing. It might make more sense to do a flip versus a hold, because, most clients, they don't care about their credit score or anything like that, because they know it's going to be easier to get that loan on the back end. It's going to be harder and harder to get that loan. So, not just pulling liquidity from lines of credit, having it sitting in cash, being able to season funds, but also start to look at your deals and run numbers. And, does it make more sense to start to flip some more of those properties instead of holds, because things are tightening up around the rental market.
Well, I'm going to throw some things out there. I see a 15% drop in values of homes across the board. Specifically, the jumbo world's going to get crushed, probably by 20%. I think your $200,000 to $300,000 homes, under $400,000, you're going to see a drop in about 15%, because there's going to be zero sales or very low sales next month, probably till May, and maybe it'll start picking up a little bit. Our bank has already stepped up, and I think they'll discount rate a little bit on purchase side. I just locked a rate for an investment property purchase, single family, right? For this 25% down, single family investment. Guy had great scores, 800 credit scores, 3.75 for an investment property. That's not a primary, that's an investment property that I locked. So money is very cheap on the buy side right now. If somebody is looking to buy something right now, they're in the driver's seat. It is switched overnight into a buyer's market. Flipping, Nick, I'm gonna tell you, flipper beware. I think they're gonna have to really reevaluate a lot of their inventory. This is where the hard money lenders are gonna have problems. They gave money to people that are not refinanceable.
Right. Right, that's the biggest thing. They're not going to be able to refinance out of that deal and pay the hard money lender back. So
at the end of the day, a 660 credit score will not get you an LLC refinance. Right. I'm sorry. You need a 700 score. You probably had a 700 score before you got into the deal and you leveraged up your credit. But right now you're a 658 credit score, and there's not a bank out there that's going to take on an LLC portfolio loan and refinance that property. What happens to that deal? I mean, do they come to you for a line of credit to stay above water? How does that work? I mean, a 658 score doesn't really, you're not at a good place to get credit lines.
And even if we get them credit lines, like, what are you going to go do with the credit lines? Pay the hard money loan back? Then you're still carrying the debt. And how are you going to get out to be able to pay the line of credit back? So that's why, a lot of the clients that we're talking to, it's, hey, listen, maybe it's not right to hold this one at this time. Maybe it's not the right environment. Maybe
you cut bait.
Yeah, and maybe you got to flip the property, take the funds, pay down debt, let your credit score rebound, and then just reassess on the next deal.
Listen, people that lost their shirt in 2008 are millionaires, became millionaires up to this past 3 weeks.
Right.
People can recover. And, cut bait, find out what the break-even point is, and sometimes it's a humbling moment, and walk and sell it. You'll see, that's where I see the buying potential of qualified borrowers that have been sitting on the sidelines jump in now and take advantage of their credit and some liquidity to pick up a property. Like me, I was ready to make an offer on a 2-family house down in Ventnor. I'm going to be going back down in May.
Right.
Because the new spring market is May through August.
Right.
June through August. I mean, that's your new spring market. People are not. April, you might as well wash out. April, you're going to have the lowest sales in real estate probably of all time since recordings. Okay, you're gonna reset the button starting in May when it comes to real estate sales. So I'll be honest. I think you're right, Nick.
Yeah, we hope. I mean, who knows when the dust is going to settle on this, right? Like, we're all predicting, we're all hoping, we're all having the best case, scenario in our head. But honestly, who knows where this is going to go 30 days from now? So, what should investors be doing? They should be preparing. They should be looking at the deals that they're doing. Does it make sense to cut bait on it? And then start prepping. Start acquiring lines of credit. While lenders are still giving out money, start to cash up, so to speak, so that you can start to take advantage of some of these opportunities when we're allowed to come back out of our houses.
Yeah, one thing that we always stress for our investors, if you have multiple entities, so multiple LLCs, an S corp, and multiple partners, you can really start to multiply how much capital you can get in place. So, we'll ask those questions, but a lot to find out what they have going on, to be able to really strategize with them to maximize capital. Whereas when you're just trying to do it on your own, you may not be thinking through those options. You may think you may need to put everybody on an application, every business owner on the application. Our job, and what we're really helping clients do is if they have 3 LLCs and 3 partners, how do you multiply that into 150 to 250 of access rather than just 50 of access?
You're saying obtaining capital from different entity lines.
Right. Yeah. If you have 2 or 3 LLCs, you can leverage the strength of your credit and your partner's credit to get access under each of the LLCs.
So where should I be using my lines of credit right now, knowing that we're going into a buyer market? I open up $100,000 line of credit with you. Should I go into, knowing that the loan costs are lower now that hard money lenders are providing? Do you think the turnkey play is maybe the best direction, like throwing, buy a 2, 3, 4 family house, owner occupied, and put 5 or 10% down instead of maybe the typical 3.5 use an FHA? Put 10% down because you're buying it on the low side, and use that money for more of a turnkey buy, the lines of credit. Do you think that is a viable option over the next 6 months?
I mean, it is. It all depends on the individual investor. Like what Eric alluded to a little bit earlier, if you have lines of credit in place, we're telling clients to put it into cash into your business bank account.
Yeah, season it.
Season it. Yeah, get it seasoned now.
2 months of seasoning.
Yeah, start the process now, because before, when hard money lenders, if you had a line of credit, it didn't need to be seasoned in a bank account. As long as you had a free and clear line or whatever the balance was, now they need to see that money in the bank account.
Me as a banker, I need to see 2 months of seasoning assets.
Right.
So I don't care about 90 days ago where the money came from. I care about the last 2 months of bank statements.
Yeah. So it's like, right now, get money into a bank account. Start to hoard cash. Start to show paper. Those investors are going to be able to take advantage of opportunities. Yeah, put a line of credit. Use it as a 5-10% down payment on a mixed family. The only thing I would say there is still be conscious of what your exit strategy is.
Right.
Depending on purchase price, you may have to carry that line for a certain amount of time, and then does the numbers make sense? So really spend time running numbers. Really spend time looking.
Well, can you pay that second line off over the time once you get into the property?
Right. Like if you get into the property, how long is it before you can actually access cash through the property, or are you adding value to it? Are you doing Are you doing rehab to increase the value so that you can potentially refi and be able to pay the line back? Start to look at those numbers.
Is there time lengths on the lines of credit? Like when you get those issued, are there like a time, like 36 months, 24 months, or is it just ongoing revolving lines?
So most of the lenders are open-ended. I've had lines in place since 2008 that I just keep using over and over again, 12 plus years. Don't see an end in sight. Others have that more routine review. Like there's one line of credit that I have that's a 3-year review. And then another that they don't do a formal annual review, but they will look at it. They don't do a hard pull, kind of behind the scenes. I think all banks are, whether it's a soft or a hard credit pull, they are looking at your line of credit and keep an eye on your credit every 6 to 12 months. Just to make sure nothing major change. So I'll work with a lot of business owners, a lot of investors that'll, we'll go get them $100,000 under the business side, and then they'll be involved. They'll use all that in a deal or in multiple deals, and then all of a sudden another deal comes up, and they'll give me a call. Eric, man, I got to tap into my personal credit. And I just tell them, be careful, because once you start to tap into that personal credit, your score starts to drop in those periodic review timeframes. You may get caught in a bad predicament. And trust me, I'm never going to tell a client to not do a deal where they can make $30,000, $50,000 in profit by tapping into personal credit for a few months. You just want to be strategic with it. But for the most part, most of them are open-ended. There are a few that have routine review periods, 1, 2, 3 years.
Yeah, and just on that, make sure that you're at least making monthly minimum payments on it. Don't be late on it. Where we see clients trip up is they'll get a late payment or something like that. I understand times are a little bit different right now, but be on top of paying your lines of credit, especially your business lines of credit and business credit cards that don't report back on the personal credit report. Those are gold right now. We're spending a lot of time to build clients up with business money that doesn't report back on the personal credit, so that it gives them the permission to use it and leverage it and keep personal credit in a good position. So right now, just keep making sure that you're at least making monthly minimums so that you don't run into a problem on the back end on a review or something like that.
Guys, this has been some really great information. I don't think people are really taking a lot of this stuff into consideration. I think people are still in shock.
Yeah.
The first minute I saw this, I double checked on my lines, make sure everything was clear. I had all my money's in check, my credit's in check, because I know I'm going to be in buying mode in the next 60 days. Look where in the inventory I already looked at. I'm going to go back and look at that, and I'm going to tell you I'm going to see probably a 15% drop on most of it. And I might even rechange my thought pattern where I'm going to be looking, because there's only so many 2 to 4 units around. I might as well try to maximize my real estate with the least amount of money out of pocket right now, leveraging my lines and my cash liquidity. But this is really important stuff. How do we reach you guys if we want to have a consultation?
So if you want to reach out, you can reach out by phone to our direct line, which is 888-783-7197. There's also the MB Capital Facebook page. So it's MB Capital Solutions Facebook page. I'm Eric Mauz. That's Nick DiFederico. One of us or one of our team members will reach out and get you set up for an initial conversation to really start to learn more about your goals and where you're, what you're looking to accomplish and how we can start to create some value for you.
Guys, I want to thank you for coming on to Smart Real Estate Podcast. I consider you part of my real estate power team and my referral sources to give to my clients and my network. We're still always referring stuff back and forth to one another. I thank you. I want you guys to be safe and take care of yourselves, and we'll see each other within the 6 feet perimeter, hopefully sometime in the next month or so. We're going to be on Liptify, Google Play, iTunes. We're going to be on Facebook Live. We're on Facebook. We're on LinkedIn. And we're going to be on YouTube. This will be put up on YouTube by our social media guru, Oz Behind the Drape, Yardell Perkins with Perkatech. So, gentlemen, have a wonderful weekend. Thank you for your time today, and I will see you guys soon.
Appreciate the opportunity.
Thanks, Yardell.
Take care.